Hi, everyone. Welcome to this edition of the Market Breadth. Today, I have a very speculative trade setup that I want to go through, and I'm very curious to get feedback from you, the audience. I'm going to share my screen here, and my speculative special here is Beyond Meat. Now, as full disclosure, I have been hating on Beyond Meat for a very long time, and it turned out to unfold the way I pretty much expected. In fact, let me flip to the long-term chart so you can see what I'm talking about here. Beyond Meat was like one of those classic pandemic overhyped plays where there were moments, of course, when we were worried about our capacity to process meat, and Beyond Meat and other kinds of substitutes were offered up as potential saviors. Now, the story for Beyond Meat lasted for a good amount of time. I mean, you could see after the IPO, it ran almost straight up, and the timing of the IPO couldn't have been better because it was right in that speculative fervor where money was free and speculation was running wild. Um, but once it got to the top here, that was the end of the story. And it did good to hang in there for what is this, a year and a half, as the company kept coming out with more and more press releases about partnerships and all sorts of promising things. And at the end of the day, it just didn't work out. And so once the speculative bubble in the market popped, you could see Beyond Meat pretty much went straight down. There was a few periods of height. So now it seems very odd to me that I'm looking at this stock and saying, hey, I think this thing is worth a buy. So let me just take you through the technicals. Number one, we had earnings here, and Beyond Meat survived. What I mean by survived is it didn't plunge like it has done in previous earnings reports, which tells me that the story may be stabilizing. That's a strict maybe. The key thing for me is the technical ability to break out above the 50-day moving average, which is this red line here, and then to have a second higher close above that. For me, that's a confirmation. And of course, for those of you who are astute traders, you're probably looking at the recent history of 50-day moving average breakouts and seeing that uh, the bullish moves have been short-lived. Well, that makes sense for a downtrend. So the key thing is Beyond Meat still in a downtrend? If it is, then of course, this breakout is not going to last that long. But I don't need it to last forever for it to make a good trading opportunity. The thing that particularly caught my eye today is this additional pop here of 6% that got me starting to accumulate some shares. What I like about this pop is that it broke out above this consolidation period where Beyond Meat's run could have easily stopped. And now, with it being December and uh, traders start to look for comeback plays for what's called the January effect. For those of you who aren't familiar with the January effect, the trading lore goes that you have a lot of institutions and big holders who dumps their losing stocks in December, sometimes now in November, as a way of their tax efficient operation. So they take the losses from the losers and apply that to the profits from their winners, presumably earlier in the year, or maybe they're doing some combination portfolio adjustment. But what that means is you have, excuse me, you have overhang, what's called overhang, that is removed from those stocks. So once those big sellers are finally done with their tax loss harvesting, then the motivated sellers are pretty much gone, and that paves the way for a big rally in January. So that's the theory. Data do support that. I haven't looked at the data honestly recently, but just at least in theory, that makes sense. And so when I see a setup like Beyond Meat, I see something that is a potential January play. And it doesn't make sense to wait until the end of December, early January, because by that time, it's a much higher risk to buy. In fact, I think Beyond Meat is already a high risk to buy because I already missed the buying point in here, which was the confirmed 50-day moving average breakout. Moreover, for those of you who know the Bollinger Band, which describes the price volatility within two standard deviations, this is kind of a stretched pattern here where Beyond Meat has been able to close above or near the upper Bollinger Band for this entire move. It does say that there's a lot of buying strength, but it also means that at any moment you can expect Beyond Meat to pull back. But I want to buy those pullbacks. And what's my target? I'm targeting a fill, or at least close to filling this post earnings gap down from all the way in August. So that's a setup. Again, there are no guarantees. I'm not making a recommendation here for anyone to do anything. Do your own homework, make your own decisions, of course. But I am interested in getting feedback as to whether or not the technicals and the theory make sense for this trade. And then to top it off, I have to note that, as a Beyond Meat bear, I can understand why so many people are shorting this stock, but as a previous bear, I should say. But come on, this is greediness. I'm on Yahoo Finance here, and I looked it up just out of curiosity. I cannot believe that 46%, that's this number here, of the float is still sold short for Beyond Meat. I don't know what the trend has been because I haven't looked at this in a long time. In fact, honestly, I haven't even looked at the stock in a while. But this seems excessively high, and this is going to potentially provide even more fuel for Beyond Meat to go higher as these shorts close up shop for the year and end up being the big buyers for Beyond Meat. So anyway, just wanted to point that out as an additional catalyst. And heck, while I'm here, let's just take a look at how bad the financials are for Beyond Meat still. Price to sales, very attractive. So if Beyond Meat is going to survive, if you're a long-term investor, this price to sales ratio is very attractive, with the huge caveat that Beyond Meat is still, I think, a consumer discretionary item, and it's a food item. And I like to compare it to things like Hormel, which I'll get to in a second after I look at the other financials. Trailing PE, of course, they're barely making any profit. So, of course, the PE numbers here are very large. And we have our enterprise value over the EBITDA ratio, which is earnings before interest, taxes, depreciation, and assets. Oh man, I hope I got that A right. Anyway, it's negative. It's not as negative as it has been. So things are sort of turning the corner. So you fundamentalists could make an argument for Hormel. So again, let me just end with some perspective on this price to sales ratio. I'm going to look at Hormel. So again, remember, Beyond Meat is now below 2. Let's see Hormel. Check it out, 1.44. Hormel Beyond Meat has essentially done the inevitable, which is to approach the valuation of its peers. I know Beyond Meat has been promoted as a growth company, but at the end of the day, it's barely better than a stock like Hormel, a mature consumer foods company. Let's do one more and look at Campbell's Soup. Check that out, 1.4 times sales. So, Beyond Meat is doing good to have almost 2 price to sales. So there's still some growth premium in there. But anyway, just to wrap this up, this is the technical setup. I like buying on dips for Beyond Meat for the January effect that I hope will end up filling up August's gap down. And I won't buy past the 50-day moving average. I'll buy down to the 20-day moving average, which is now turning up sharply. That's the dash line. And a stop loss would be below the 50-day moving average. It would be very painful, of course, if Beyond Meat fell this low. So I'm sizing my position accordingly. So again, make your own decisions, do your own homework, and when you trade wisely and according to your own risk preferences and your financial setup. Looking forward to your comments below, and thanks for watching.